Good afternoon, I'm Vivek Iyer. Welcome to Midcap Radar, and with me today for a change is Mangalam Alu. Good afternoon, Mangalam. Well, after 14 straight sessions of gains, as far as the broader end of the market was concerned, the mid-cap and the small-cap indices, every day we were talking and they were in the green. But today, after a while, both of the indices are in the red and they're seeing quite a bit of selling pressure, especially in the last hour of trade.
Yep, in the mid-cap end, yes, but like you said, it precedes 14 days of gains itself, so maybe some give back of profit. Just keeping an eye out on the Nifty because, this 24,550 mark seems to be a bit of a support ahead of the weekly options expiry. What we'll do is take note of all the top stories that we're tracking this afternoon and get cracking on the market. Stocks continue to drift lower with frontline indices slightly lower. Declines far outnumbering advances. IT, metal eke out some gains while FMCG and auto are the prominent drags. It's the mid-caps which are underperforming.
Edelweiss exits Nuvama Wealth, raking in over 1,700 crore rupees, while an investor offloads over 700 crore rupees worth of stock in Newland Labs. Both of these deals were done in the block deal window. This even as Zagil and Gravita line up QIPs of nearly 1,000 crore rupees each.
Max Health surges nearly 3% after Axis Securities initiates coverage with buy rating, target of 13-15 rupees per share. Says the strong operational performance has resulted in significant EBITDA growth and improved margin.
Concor is down 3% after brokerage firm Goldman Sachs turns bearish on the stock and cuts the target price further to 710 rupees a share from 810 rupees earlier, citing further downside risk driven by weak growth.
Brainbees, so First Cry, surging in trade today after Kotak Institutional Equities initiates coverage. The target of 630 rupees per share. The brokerage believes increasing scale and improving profitability will drive 17% revenue and 30% adjusted EBITDA CAGR in this business over the next 3 financial years. In an otherwise wobbly market, we do have a bunch of stocks which are buzzing around, and some of them belong to the Adani Group. So all of them, after that initial jump that we saw in the stocks at around 10:30, there is another jump, and all these stocks are moving higher. But we're also seeing some traction in banks once again. So IndusInd Bank, for instance, has moved to the high point of trade. Nifty Bank is relatively outperforming today in the sense that it hasn't fallen as much as the frontline index. And we're seeing some up move in a couple of these, capital market themes as well. Angel One, for instance, has recovered from the lows. We're seeing some traction in names like Polycab and SAIL. So these are a bunch of stocks which are doing well, but a bunch of other stocks also on our radar. Hormaz, as always, joins us to take us through the mid-caps that are moving around in trade. Hormaz.
It's been a while, right, since the mid-cap index and the broader markets are in the red in today's trading session. So we'll start off with the losers in the broader markets. Leading the pack is Nalco, and Nigel did a very detailed explainer on that just a few minutes ago. 7.5% lower now for the stock at the lowest point of the day. Not a very good day for Jubilant Foodworks, Indus Towers and Biocon as well. All of them are down at the lowest point of their respective day. And a lot of brokerage commentary came in this morning and mixed reactions to that. Concor is trading with losses at the low again, now 4% down for Concor. Max Health is buzzing on an Axis Securities note, and Signature Global trading with healthy gains after that HSBC note predicting a bumper 2025 for real estate. Some of the other stocks that are in focus in today's trading session, and they'll come up on your screen, and that is on courtesy the block deals that have taken place. The block deal that took place in Nuvama, 5% down there. Edelweiss opened higher off the highs of the day, holding on to some gains, and Newland Laboratories as well. The block deal that came in 5% lower there as well. And lastly, stocks that are doing well on the back of volumes, and they are the ones that are bucking the trend today. Century Ply up 4%. Chalet Hotels is at the high of the day, now 6.5% higher, and CEAT recovering after a couple of days of profit booking on strong volumes. Back to you guys.
Thank you so much for that, Hormaz. Well, a couple of other stocks on the radar, which have hit the low point of the day. First one, from the auto pack, Bajaj Auto as well as Hero Motor, both of them seeing quite a bit of selling pressure and now down near the day's lowest point. But let's now welcome Jay Thakur from ICICI Securities for a technical check on the market. Good afternoon, Jay. Thank you so much for joining us. What are you making of markets at the current levels? Do you feel that market have hit significant resistance levels?
To you, Nick, and good afternoon to you, Mangalam. Well, as far as Nifty is concerned, since past couple of days, we were seeing that consolidation very clearly. I mean, with a very small or a narrow range, wherein 24,700 acted as a very crucial resistance for this week. And today being a weekly expiry, we continuously saw the call base increasing right from 24,700 now down to 24,600, where there is the highest call OI. So it would be difficult for Nifty, in fact, to close above the levels of 24,600 for today. And on the lower side, I believe now that 24,400 to 300 is an immediate support range. Importantly, Reliance is the only stock which has not participated much, and that's actually weighing pressure on the index as of now. And that seems to be in the corrective mode still. If it recovers, then I think if it joins the wagon along with the Bank Nifty and IT, then probably there will be a stronger recovery. Else, it can be few days of consolidation, which you and Mangalam were also pointing out that after 14 to 19 days of rally in mid and small cap indices, finally it's cooling off there and going into consolidation mode. So markets are right now in some consolidation mode, but overall short-term trend seems to be positive. So it would be a buy and declines kind of a market.
All right, buy and decline kind of market. What stocks are you backing in this market?
Sure, Mangalam, see, overall, the IT sector has been doing really good. I mean, it was the outperformer when Nifty had fallen by 3,000 points. So, therein, Nifty was down by 11.5%, wherein IT was just down by 2.5%. And that outperformance continues. I mean, it's creating life highs, and we have been seeing NASDAQ also performing quite well. So, IT is the theme right now. And from the mid-cap IT, I like two stocks. One is Emphasis, which is trading around the levels of 32.13 right now. It has given a very strong breakout from its multiple swing resistances. We have seen a good long buildup as well out here on the derivatives data. So on the lower side, 31.40 would be a crucial support. With that as a stop loss, one can go long on Emphasis, targeting around 30,450 to 3,600 positionally. The second buy recommendation is on LTI Mindtree. I mean, this too has taken off its multiple swing resistors. In fact, has provided a breakout from an ascending triangular pattern. And the data out here on the futures side is also quite strong. A strong long build-up seen here as well, Mangalam. 66.71 is where it is right now. One can place the stop loss at 65.90 and target 6900 to 7100 going forward.
Okay, thank you so much for that, Jai. So, like the IT space currently, while the market is seeing quite a bit of consolidation. Well, moving on, let's now dive into the Growth Code, an initiative by Grow and CNBC-TV18, which offers valuable insights and strategies to help you navigate the market and make well-informed investment decisions. This week, CNBC-TV18's Prashant Nair sat down with Nilesh Shah, the MD and CEO of Kotak Mahindra AMC, to discuss the significance of having a structured investment plan and how it can empower investors.
How important is a written down investment plan so that one stays the course? How important is it in the overall scheme of things?
So there are two components to it. One, having written plan is very, very critical, especially if it carries your own messaging, your own writing, your own words. But more important than writing the plan is the execution. We should not use written plan as New Year resolution, which needs to be broken next day. You have to walk the talk. If you can walk the talk, then this written plan is fantastic. And if you can't write your plan, please go to an advisor who can help you navigate the volatility.
Welcome back to Midcap Radar. Well, as promised, let's now talk about Quick Heal Technologies. The company has seen a pickup in revenue in H1 FY25, their consumer business showing resilience despite industry-level challenges. To talk about the business momentum and outlook here, Vishal Salvi, the CEO of the company, joins us now. Good afternoon, Vishal. Thank you so much for joining us. First up, give us a sense of how Q3 is shaping up. We also understand that there were some headwinds that you were facing in the business. So Q3 have headwinds abated?
Here obviously we wanted to talk about our launches and some of the new exciting offers that we have for our customers. I think we have always maintained that we are right now in an investment mode, focusing on our R&D and also significantly focusing on our pivot, to the enterprise business. And in the last few years, you've seen that our enterprise to our consumer mix has grown to around 40%. And it's showing a strong trajectory towards increase. So I think that's really what we're focusing on. And if you've seen our previous announcements, we have actually talked about releases of the new technologies that we would be doing. And last week the largest cybersecurity conference that we were there, we actually announced those. So we are committed and we are delivering on those commitments of the new products that we are launching. So overall, I think we feel comfortable and happy in terms of how we are progressing so far.
All right, you're comfortable and happy, Vivek. Vishal, just a couple of things on building on what you said already. Two things. One, you said you are focusing more on enterprise versus retail. What's the difference in margin out here? I mean, it's 40-60 right now. Where do you anticipate this to go? That's point number one. And secondly, you announced a few launches last week, but you also had launched antifraud.ai, a new category in the consumer security vertical. What's the addressable market here and what's your aspiration here?
Yeah, so, we had mentioned this earlier as well, and I wanted to just reconfirm that, our enterprise business is, better in terms of margin, in terms of, how we look at, because the consumer business has become deeply commoditized. And so, it's high volume, low margin business. And the growth as well as the, profitability is in the enterprise. And that's why the company is right now deeply focused in that. Doesn't mean that we are, leaving our pedal, in terms of our consumer business is concerned. And that's the, our commitment towards that by the fact that we launch antifraud.ai, which is a purely consumer product. The reason we launched it is because we were seeing so many different frauds which are happening in cybercrime growing in the country. And a lot of that is actually emanating from mobile phones and social engineering attacks. And it's basically because people are not able to really adjust to the way in terms of how these frauds are, looking at the vulnerabilities of your phone and, exploiting that. And so, we thought that just what we have done 3 decades back, as far as antivirus is concerned, we have now launched a new category for anti-fraud, which has the foundation of what we do as antivirus, but also added more features and functionalities. So we are extremely ambitious in terms of our goals. And, just like we are standing for, Quick Heal stands for antivirus, we want to now, position Quick Heal to stand for, anti-fraud when you talk about this problem to be solved. So it's the initial launch, just a couple of months into the launch. We've got some good feedback. We've already, in a phase of releasing new versions of the product. And the growth is going to come in the future, once we've kind of fine-tuned and, made it broad-based.
Understood that. Vishal, could you give us a sense of timelines? In the last couple of years, you've been in investment phase, like you mentioned. Also, this particular development, antifraud.ai, that too has entailed quite a bit of R&D expense. Now, give us a sense, number one, what is the kind of revenue pickup you're seeing from these investments? And also, in the past, you've spoken about monetizing, some of the R&D spends that you've done earlier. So what is the status on that?
I think both are critical. I think the first one, the cybersecurity product business is extremely new from an Indian market perspective because we are the only cybersecurity company, full stack cybersecurity company from India. Majority of the players who dominate world as well as India right now are from US and Silicon Valley. And so from that point of view, there's also a lot of awareness that is required in terms of how you look at this business model from Indian context. And typically you will find that there is a long gestation period to get a right product market fit. And you need to remain invested because, the threats are changing dynamically and you need to be able to keep on investing so that you are able to build a product which is able to withstand all these threats, which are not just for today, but also for the future. So we will continue to be in the investment mode for the foreseeable future. And we will keep on adding more and more product launches so that we are able to build a comprehensive platform and portfolio for our customers. That's really what our ambition is. And eventually, we want to be the Indian, global cybersecurity product play, right? Now, so we will continue to do that. Now, to answer your second question, I think what we are seeing is a pivot and, we will right now focus on building that foundation for that enterprise business, and we are still deeply invested in that right now. So it will take time for us to break the shackles to actually compete with the global players and actually start seeing that upside in future quarters.
You know, we would have liked a lot more in terms of numeric details. So just, I'm trying my luck here once again. Let's say 3 years from now, with all the things that you're doing, what could your annual revenue run rate be? And I ask this because for the last 6 years or so, your annual run rate has been just around 300 crores. And the margins have, you know, dropped from what? A peak of 16% in FY21 to as low as 5% last year. So 3 years from now, what is your aspirational revenue and margin target?
Yeah, so unfortunately, I'll not be able to give you numbers, but I'll give you something for you to really get a sense of what we are into, right? So from a comparison point of view, clearly, it's not fair to compare because we were a consumer business in the previous comparison that you're doing versus what we are now getting into, which is enterprise. So all the investments which are happening is because we want to pivot to that enterprise, and we are doing it by putting all the profits into the new products which are not yet broken even, and they will break even in future. So that's number one, and we are obviously putting all that money and expensing it out. That's number one. Number two,
Right.
is you have to look at the cyber security growth industry and then look at us in terms of our potential and see that we will definitely be doing better in terms of growth as compared to the CAGR of the cybersecurity industry in the near future. So when you look at a 3-year
Right.
horizon, given where we are today, we will actually pivot and we will get into that space very soon.
Okay, so maybe not look at historical CAGR in terms of what you've delivered, but look at the industry and hopefully you hope to outgrow that particular industry trend. But moving on, thank you so much for joining us and sharing insights. And the stock has moved to the day's highest point, even as you spoke to us. Well, let's now focus on some stocks which are on the move. Max Healthcare is buzzing in trade on the back of a positive brokerage note from Axis Capital. Winnie is here with more details on that particular note.
Good afternoon. Yes, so we have this note that is coming from Axis Securities. They're initiating coverage on Max Health. Buy rating is what they've given. Target price of 1,315 rupees per share, which indicates an upside of almost 15% to 18% from yesterday's closing price. Now, why are they positive on it? One, Max Healthcare is a market leader in Delhi NCR region and Mumbai regions. Also, they've been catching up pace there. They have over 2,900 beds and especially a dominant leadership in the oncology segment, which has been picking up pace. And that is what even other companies have highlighted. Now, the company is planning to add 3,000 beds over the next 3 years, and this is mainly going to be through brownfield expansion. They already have strong operational performance as well as which has resulted in better EBITDA growth and improved margins for the company. So this is keeping Axis Securities positive on Max Healthcare. They believe that the company is well positioned to continue to see the profitability and growth that they've been seeing in the last couple of years. They're expecting a growth rate of around 30% in terms of revenue for FY25 and an EBITDA growth of around 31%, while in FY26 they're expecting 23% revenue growth and a 24% EBITDA growth. Quite positive on this one, and that is why Max Healthcare is buzzing in trade.
Right, Vinny, thanks a lot for that. We'll take a short break, come back on the other side. We'll focus on Nalco, which is seeing some sharp downtick in today's trading session. We get you the reasons why. Market continues to hold at lower levels in today's trading session. The latest round of selling has come in from the auto space. So pull up Hero MotoCorp, that's at the low point of trade. Alongside that, we have the Nifty Auto Index itself, which has moved lower itself. In that, the one stock which is actually, seeing the most amount of sell-off is Nalco, down nearly 7% Remember, it had seen a big move in the last 1 month or so. So now it's seeing some bit of an undoing of those gains itself. Why exactly is that happening? Remember, Nigel earlier told us that, it moves closely linked to alumina prices, and alumina prices have declined from what, close to around $800 per ton to around $700 per ton itself. And as a result of which, realizations for Nalco may be lower than what the analysts are factoring in. These are, the views that Nigel got us just about an hour ago itself. With that, we're out of time on this edition of Midcap Radar. But as we do that, let's give you some good news. All you viewers, you must know that The new business news leader for India is now just a click away. Introducing CNBC-TV18's all-new app. Get instant access to breaking news, in-depth articles and financial world updates right at your fingertips. You can download the CNBC-TV18 app from either the Apple Store or the Google Play Store, and the business leader will be there for you on your fingertips.